It begins in a moment of tension, the kind that feels electric in the air. A young trader sits before a wall of flickering monitors, each screen pulsing with reds and greens, each number shifting like waves in a storm. You can almost hear the heartbeat in the room, not from the person, but from the market itself. It's unpredictable, wild, and merciless. Now imagine someone stepping into that chaos, not with the blind rush of a gambler, but with the measured calm of a chess grandmaster. This is where Linda Raschke's legend begins. Years ago, she took a modest stake of $25,000 and transformed it into $1.2 million, not by predicting the future, but by thriving in uncertainty. She was wrong 40% of the time, and yet she won. The difference? While others played checkers on a flat board, she played chess in 3 dimensions, thinking 15 moves ahead. The backdrop wasn't a quiet cafe or a peaceful study. It was a trading pit roaring like a hurricane. On October 19th, 1987, Black Monday, when the S&P 500 collapsed 22% in a single day, most traders faced ruin. Phones rang unanswered, orders slipped through the cracks, charts looked like heart monitors flatlining. But Linda didn't chase the bottom or grab at falling knives. She sliced through the chaos like a surgeon, precise and deliberate. Every move was calculated, every risk measured. She left that day not just unscathed, but profitable, while traders with decades more experience were swept away. This is more than a biography. It's a study of the mind under fire. The heart of Linda's success lies in her ability to see the board when everyone else saw only the storm. Her approach isn't about certainty, it's about control in the face of uncertainty. It's about making the right move in the right way at the right time, no matter what the market throws at you. You're about to step into her world, a world where the candles on a chart are not just lines and colors, but pieces on a battlefield. A world where hesitation is a luxury you cannot afford, and adaptability is the only insurance against disaster. This is the opening move. And in this game, every move counts. Welcome to a place where the noise of the market is stripped away, and what's left is the mind behind the moves. This isn't about stock tips or magic formulas. It's not a secret indicator hidden in the corner of a chart. What you'll hear is the psychology of trading, the mental wiring that separates those who survive from those who fade. Here, we study the greats not as legends carved in stone, but as people who made decisions under pressure, who adapted when the rules of the game changed mid-play. This channel isn't here to sell you certainty. It's here to show you how mastery is forged. In losing trades, in sleepless nights, in the discipline to try again after failure. But before we dive in, a reminder. Nothing you hear here is financial advice. Your capital is yours. Your decisions are yours. Your wins and losses are yours. The insights we share are for education and perspective, not for copying blindly into your own account. We're here to learn the patterns within chaos, to decode the moves of traders who've danced with the storm and lived to tell the tale, to explore how their thinking works so you can build your own edge, not theirs. The market doesn't owe you fairness, it doesn't owe you a second chance, but it does offer patterns, rhythms, and moments of opportunity for those prepared to act. That's what we're here for. And if you're ready to think deeper than price action and deeper than charts, you're in the right place. The market doesn't whisper, it roars. You can feel it in your chest before you see it on the screen, the pulse of numbers flickering, charts shifting, spreads widening and narrowing like the breath of something alive. Most traders enter this space thinking they're here to predict the future, like fortune tellers staring into a crystal ball made of candlestick charts. They want certainty, a fixed truth in a sea of variables. But that's where they go wrong. Linda Raschke understood this early. The market is not a puzzle you solve once and for all. It's a storm. And in that storm, there's no such thing as permanent shelter. The wind shifts without warning, the waves rise higher than you thought possible, and even the strongest ships can be smashed apart in an instant. To survive, you don't try to stop the wind. You learn how to sail through it. Her metaphor is a chessboard in the middle of a hurricane. Each piece is a potential move, each square an opportunity or a trap. The storm is the chaos of price action, news shocks, and human emotion, all of it spinning around you, relentless. The difference between winning and losing isn't about having a perfect forecast. It's about knowing exactly which move to make when the wind changes direction. Picture it, a 5-minute chart filled with red candles, each one stabbing downward like the teeth of a saw. A novice trader freezes, eyes wide, trying to decide whether to sell, hold, or hope. Their mind clings to the plan they made that morning that now feels like a map drawn for another planet. But Linda, she sees the same chart and already knows her next 3 moves. She knows which positions to cut immediately, which ones to protect, and where the next opportunity might surface. Her mindset doesn't resist chaos, it incorporates it. She's not thinking, when will the storm end? She's asking, how do I position myself within it? This is a subtle but critical shift. Traders who expect calm seas panic when the waves hit. Traders who expect storms prepare for them, and when the chaos comes, it feels almost routine. It wasn't always this way for her. Early in her career, Linda admits she clung to her analysis like a lifeline. She'd spend hours mapping setups, convinced that the market would respect her levels, and when it didn't, she fought back, holding on to losing trades, adding more in the hope of a reversal, letting a small wound turn into a mortal blow. She learned the hard way that the market has no mercy for ego. The turning point came after a string of losses that left her account bruised but not broken. She realized that her job wasn't to be right, it was to adapt. The market doesn't care about your opinion. It doesn't care how much time you spend on your chart. All it cares about is movement, and your survival depends on moving with it. From that moment, she rebuilt her mental game. Each trading day became a tactical exercise. Scan the board, identify the terrain, position the pieces, and respond to the first sign of change. She prepared for multiple outcomes before the opening bell rang. If the market opened higher, she had a plan. If it dropped, another plan. If it chopped sideways, yet another. Nothing caught her off guard because she'd rehearsed the possibilities. The chessboard metaphor goes deeper. In chess, you don't just react to the opponent's move, you anticipate their likely responses to yours. Linda treats the market the same way. If she enters long in a trending market, she's already thought about where sellers might step in, where stops might be clustered, and how price might behave around key levels. She's not guessing in real time. She's executing a playbook she's internalized through thousands of hours of observation. And in the middle of that storm, discipline is her anchor. The novice will look at a sudden spike in volatility and feel compelled to act immediately, chasing a breakout or bailing out of a position in fear. Linda pauses, not to delay action, but to confirm it. One more glance at the board before moving the piece. Because she knows, one rash move can turn an advantageous position into a losing one. Her ability to stay composed in chaos comes from a deep respect for the game itself. The market will not bend to your will, but it will reward skillful play. Skill isn't just technical analysis, it's the combination of preparation, adaptability, and emotional control. The storm tests all 3 at once. Imagine 2 traders side by side during a sudden sell-off. One is furiously clicking, flipping positions, chasing each candle as if trying to catch lightning in a jar. The other, Linda, adjusts her position size, maybe takes a small, precise counter trade, then sits back, letting the noise pass until the high probability setups emerge again. The first trader is exhausted after an hour. The second is still sharp at the end of the day. That's the real edge, conserving mental and emotional energy so you can execute well when it matters most. Just as in chess, where the early game sets the tone for the mid-game, the way you handle the first waves of volatility sets the tone for your entire session. Panic early, and you'll play defensive for the rest of the day. Start composed, and you'll see the patterns more clearly as they unfold. Linda's mindset isn't just a trading philosophy, it's a survival strategy. It's the recognition that chaos is the constant, and control comes only from mastering your own reactions. The storm will never stop. The only variable you can truly control is you. So when she sits at her desk in the morning, she doesn't hope for an easy day. She welcomes whatever the market brings. The sharp reversals, the false breakouts, the relentless trends. Each one is just another configuration on the chessboard, another puzzle to solve in real time. In her own words, I'm not here to beat the market. I'm here to outlast it. That's the core of her metaphor. You don't win by ending the storm. You win by staying in the game long enough to make the right moves again and again. And if you can see the market as both storm and chessboard, you're already halfway there. You're here because you're tired of trading feeling like a coin flip. You've had enough of chasing so-called hot tips that burn out faster than a shooting star. Your charts might look like a battlefield littered with the remains of indicators you once trusted, each one a failed promise of clarity. And deep down, you know the truth. What you've been doing isn't giving you an edge. This is where Linda Raschke's 13 moves come in. Not a dry checklist, not a hollow system someone cooked up overnight, but a distilled blueprint from decades inside the storm. These are the moves that allowed her to survive Black Monday, ride out the insanity of the 2008 crash, and walk away from countless market tempests with her capital and her confidence intact. Think of them as the opening lines to a secret language, a way of reading and responding to the market that most traders never learn. Each move is a piece of a larger game, one that's not about winning every trade, but about staying alive and sharp long enough to catch the trades that matter. Over the next 13 sections, you're not just going to hear about technical setups, you're going to feel the tension, see the board, and understand how each piece fits into a bigger strategy. You'll learn when to press your advantage and when to retreat, when to adjust your formation, and when to stay still and let the chaos burn itself out. By the time you've walked through all 13 moves, you'll see the market differently. You'll stop thinking in terms of right or wrong and start thinking in terms of position and timing. You'll stop fighting the storm and start using it. And maybe, just maybe, you'll find the calm Linda has, not because she knows the future, but because she's prepared for every move the board can throw at her. The market doesn't politely announce its intentions. It doesn't tap you on the shoulder and whisper, "We're going up now," or "Time to get out." No, it kicks down the door, floods the room, and dares you to keep your footing. To most traders, this chaos feels like an enemy. To Linda Raschke, it's simply the arena she plays in. Imagine a Wednesday morning in late autumn. Outside, the wind rattles the windows, but inside the trading room, a different kind of storm brews. The S&P futures are already surging and dipping before the opening bell. On the 5-minute chart, price bars stretch and snap like rubber bands. For a novice, this feels like trying to defuse a bomb with shaking hands. For Linda, it's the familiar hum of the board coming alive. Before the market even wakes, she's already drawn her map. Overnight ranges, key support and resistance, the current volatility conditions. These are not just random marks. Each is a square on her chessboard. She knows where her safe squares are, where the traps lie, and where the sharpest battles might break out. This preparation means when the opening bell rings, she doesn't freeze. She makes her first move without hesitation, not because she feels lucky, but because she's rehearsed this scenario 1,000 times. Here's the reality. In a market storm, nothing stays still. The perfect setup can unravel in seconds. A clean breakout can turn into a vicious fake-out before you can blink. Most traders panic in that moment, clinging to bias, hoping the market will come back, or doubling down out of frustration. Linda doesn't waste time on hope. She moves to the next square, the next opportunity, without looking back. She learned this lesson the hard way. Early in her career, she let pride and stubbornness cost her more than she wants to admit. A trade would go against her, and instead of cutting it, she'd hold on, convinced the market owed her a reversal. Sometimes it did, but often it didn't, and every time she refused to adapt, the storm took its toll. The shift came when she started treating the market like an opponent in chess, not a puzzle with one fixed answer. In chess, you can't force your opponent to play the move you want. You can only respond intelligently to the move they've made. The market is the same. It's not your job to change it. Your job is to understand it and act accordingly. Embracing the storm doesn't mean trading recklessly. It means accepting that volatility is a constant and using it to your advantage. Linda treats a sudden surge not as a threat, but as a signal, a bold move by her opponent that might open up new plays. She's quick to pivot. If the conditions shift from trending to choppy, she changes her tactics. If the market suddenly accelerates, she adjusts her position size and strategy to match the speed of the board. That adaptability is her shield. Think about the last time you held a losing trade, waiting for the price to come back to your entry. The longer you waited, the more trapped you felt. In that moment, you weren't playing to win. You were playing not to lose. Linda refuses to put herself in that position. She doesn't beg the market for mercy. She steps to the side, regroups, and waits for the next chance. It's this emotional detachment that allows her to stand in the same storm that wrecks others and still walk away ahead. She doesn't confuse stubbornness with strength. Strength is in knowing when to advance and when to retreat, in accepting that you can't control the storm, but you can control your moves. One of her favorite analogies is sailing. If the wind changes, you don't curse it, you adjust your sails. If a squall blows in, you don't stand on deck arguing with the clouds, you navigate through. The market is no different. Every day is a weather system of its own. Some days are clear skies with gentle winds, others are sudden squalls and shifting tides. The trader who survives is the one who can read those conditions and adapt without losing composure. On days when the storm is at full force, Linda focuses even more on precision. Her moves are smaller, faster, more deliberate. She's not swinging for home runs. She's collecting singles, steady gains that build while others are getting washed out. This isn't a lack of ambition. It's a recognition that survival comes first. In a hurricane, you don't try to build a skyscraper. You focus on keeping the shelter intact. Her approach to embracing the storm boils down to three principles. 1. Map the board before the bell. Know your levels, your volatility conditions, and your possible plays before the first move. 2. Adapt instantly to shifts. When the market changes tempo, change your formation to match. 3. Detach from outcomes. Don't cling to losers or force winners. Focus on positioning for the next best move. For Linda, every day is another match. The market will throw bluffs, traps, and feints. It will tempt you to abandon your rules and pull you toward emotional decisions. But if you've accepted that the storm is part of the game, if you've stopped waiting for it to calm down, then it loses its power over you. By mastering the board within the storm, you stop being a victim of market weather and start being a strategist. You see the storm not as a danger to be feared, but as the very environment in which your edge can shine. That's when trading stops feeling like a gamble and starts feeling like a game you know how to play. The opening bell is the first shot in the day's battle. For some traders, it's a mad scramble, clicking frantically, chasing the first breakout, or dumping positions in panic at a sudden drop. For Linda Raschke, that moment is never a surprise. By the time the bell rings, she's already fought half the battle in her head. Picture her at dawn. The city is still waking up, but her screens are already alive with the quiet hum of overnight data. Global markets are printing their stories. Tokyo's closed, Europe's open, currency pairs drifting, commodities ticking. She's not glued to any one chart. She's scanning the whole landscape, like a general surveying the battlefield from a high ridge before sending her troops in. Her first task is reconnaissance. She reviews the overnight range in the S&P futures, marks where price found acceptance, and notes where it was rejected. She checks volatility levels, monitors prior day highs and lows, and key support and resistance zones. These are the borders of today's chessboard, the terrain that will shape her moves. By now, she already has a mental map. If price opens above this level, she knows her possible entries. If it opens below, she's ready with a different set of plays. If it opens inside yesterday's range, she adjusts expectations for a slower, more tactical battle. Every scenario has been rehearsed before the market even blinks awake. This preparation isn't about prediction, it's about readiness. She doesn't waste time guessing whether the market will go up or down. She's building a flexible plan for whichever way it chooses to move. Think of it like preparing a chess opening repertoire. You don't memorize one fixed line. You train multiple openings so that no matter what your opponent plays, you have a confident response. And she's ruthless about sticking to her opening plan. Many traders blow themselves up in the first 15 minutes because they confuse movement with opportunity. The market surges and they leap in without out confirmation, only to get trapped in a reversal. Or it drops sharply and they dump everything in a rush, missing the bounce that follows. Linda avoids both extremes because she doesn't enter unless her predefined conditions are met. Her tactical mind is her shield against two great enemies of the open: overreaction and hesitation. Overreaction is lunging at the first bright move on the board, mistaking it for a winning play. Hesitation is freezing when the moment to strike finally arrives. The cure for both is the same: preparation. She knows her opening moves for each type of market environment: trending, choppy, high volatility, low volatility. These aren't rigid scripts, but flexible frameworks. A trending market might call for breakout continuation plays. A choppy market might favor fading extremes. But the setups are known in advance. When one appears, she doesn't think twice, she acts. There's a rhythm to her pre-market routine. She doesn't just glance at a level and write it down. She studies the context: what news events are on the calendar, what economic reports might hit, whether there's an earnings announcement that could spark sudden volatility. She builds not just a technical plan, but a situational awareness of the forces likely to move the board. Once the scenarios are mapped, she visualizes the moves. If the market surges into resistance at the open, she pictures herself fading the move: where she'll enter, where her stop will go, where she'll take profits. If it breaks through that resistance with conviction, she sees herself joining the momentum, again with exact entry, stop, and target points. By the time the bell rings, these plays aren't vague ideas. They're fully formed, rehearsed moves. She's not thinking about what to do, she's executing what she's already decided. Contrast that with the average trader, who starts their day by reacting to whatever the first candle does. Without a map, every move feels urgent. Every tick feels like a decision point, and stress levels spike before the first half hour is over. By the end of the day, they're mentally exhausted, having played the market's game instead of their own. Linda flips that script. Her goal is to control the board early, not to chase it. The first 30 minutes aren't about making the biggest gains. They're about setting the tone for the rest of the session. If she's in sync with the market early, she's more likely to stay in rhythm all day. This mindset is what separates tactical traders from impulsive ones. The tactical trader treats the open like a grandmaster treats the first 10 moves in chess, laying a foundation for the mid-game. Every piece is placed with intention. Every move either builds toward an attack or secures a defensive position. It's not always about entering a trade immediately either. Sometimes her tactical decision is to stay flat for the first 15 minutes, letting the market reveal its hand. She's patient enough to wait for high probability setups instead of burning mental and emotional energy on low quality opportunities. She remembers one particular morning when the market gapped up into a major resistance level she had marked days before. Most traders piled in long on the open, chasing the gap. Within minutes, it reversed sharply, trapping them in losing positions. Linda had been ready for that exact scenario. She faded the move, hit her profit target, and stepped aside while others scrambled to recover. Her process that day was no different from any other: gather intel, define the board, visualize the plays, execute without hesitation. That's the tactical mind, not prediction, but precision. Every trading day is a new match, and the open is the point where the pieces are first moved. In those opening minutes, the market is setting the stage for the battles to come. Traders who enter that moment unprepared are already at a disadvantage. But for Linda, the open is simply the moment the plan begins. Speed is a dangerous thing in trading. It can be a sharp blade in the right hands or a weapon that cuts you down before you even know you're bleeding. In the fast game, those lightning moments right after a breakout, during a news spike, or in a sudden liquidity vacuum, hesitation can cost you profits, and recklessness can cost you survival. Linda Raschke built her career in these moments. To watch her trade in high-velocity conditions is to see a master at work. Quick, precise, deliberate. She isn't the fastest because she clicks the mouse first. She's the fastest because she already knows what she's going to do before the opportunity appears. Black Monday in 1987 was the perfect example. While the rest of the market seemed to fall into panic, bids vanishing, spreads widening into unrecognizable gaps, Linda played the fast game with surgical restraint. She didn't try to catch the bottom or hold a hero position. Instead, she took small calculated trades, in and out, singles instead of home runs, stacking controlled wins while others chased chaos into disaster. The key to mastering the fast game isn't speed alone, it's prepared speed. A novice trader might see a breakout and leap in without a thought, only to watch it reverse instantly. Or they'll freeze when the move appears, missing their moment entirely. Linda has no such dilemma. She has rehearsed the setup, visualized the price action, and defined her entries and exits in advance. By the time the trigger appears, her decision is reflex, not guesswork. Her setups for the fast game are deceptively simple: bull flags, volatility squeezes, clean breakouts from well-defined ranges. But her execution is anything but casual. She reads order flow like a language, spotting when a breakout is real because of conviction in the buying, or when it's just bait to trap traders before reversing. And she never forgets that speed fuels emotion. The adrenaline of a quick win can make you greedy. The sting of a quick loss can push you into revenge trading. Both are deadly. Linda's solution is to treat every fast trade as a single move in a much larger game. One trade doesn't define her day, it's simply one more opportunity, taken, managed, and moved on from without drama. This discipline shows in her risk management. When the game is fast, she keeps her position sizes proportionate to the volatility. A fast market can give you profit quickly, but it can also take it away just as fast. Her stops are set before entry and never moved to give it room. She'd rather take the small loss and re-enter than turn a scratch into a wound. Her mantra for the fast game is quick in, quick out. She doesn't fall in love with a trade, doesn't fantasize about the one that will make her weak. She takes what the market offers, no more, no less. That way, when the inevitable losing trade comes, it's just another scratch, not a mortal blow. Linda often compares the fast game to fencing. Every point is won in seconds, sometimes milliseconds. You can't afford to second guess, and you certainly can't afford to overextend yourself. Each move is the result of hours of preparation and lightning judgment in the moment. In trading, just like in fencing, the most graceful players are often the deadliest. There's a psychological trap many traders fall into. They believe the fast game is about chasing every flicker of movement. Linda knows better. The fast game isn't about reacting to speed. It's about recognizing your patterns at speed. If your setup isn't there, you do nothing. If it is, you act without hesitation. That restraint is what gives her the capacity to strike only when the odds are truly in her favor. One of her teaching stories involves a student who kept getting chopped up in fast markets. He would jump into every breakout, convinced the more action he took, the more money he'd make. Linda had him sit out entire sessions, only trading when one of his predefined setups appeared. At first, the waiting drove him mad, but over time, he began to see the difference between motion and opportunity. His win rate climbed, his stress dropped, and his account stopped bleeding. Linda's mastery of the fast game isn't about machine-like reaction speed, it's about mental stillness in motion. While the tape flies, she is calm, almost detached, seeing patterns in the blur. Her mind doesn't speed up to match the market, it slows down, focusing on precision. In practical terms, mastering the fast game means have your triggers predefined, know exactly what conditions must be met before you enter. Size for speed, trade small enough that you can act without fear. Exit with intent. No, let's see what happens, only planned profit targets or stops. Detach emotionally. A win is just one win, a loss is just one loss. Both are part of the flow. In the end, the fast game isn't just about making quick money, it's about preserving capital in a dangerous environment while extracting high probability profits when the window opens. Linda plays it with the precision of a surgeon and the patience of a hunter. Most traders think they're ready for the fast game because they can click quickly. Linda knows it's about thinking clearly when everything else is moving too fast to see. That's the difference between gambling on speed and mastering it. Most traders stare at charts and see noise, jagged lines, random moves, candles that form and vanish like waves on the shore. Linda Raschke looks at the same chart and sees a conversation, a hidden rhythm beneath the chaos. She doesn't just memorize patterns, she understands the behavior behind them. Her philosophy is simple. Every pattern is a story about human decision-making. A flag pattern isn't just a shape, it's a group of traders pausing after a strong move, consolidating before deciding whether to continue or reverse. A wedge is indecision tightening into a point, pressure building until one side concedes. To most, these shapes are abstract geometry. To Linda, they are psychology in motion. She didn't learn this from textbooks alone. Her eyes were trained by thousands upon thousands of hours watching price move in real time. Years in the pits, decades in front of screens, all that exposure sharpened her ability to see subtle changes others miss. This is the skill that allows her to spot the coil before it springs, the exhaustion before the turn. One of her favorite examples is from 1994, trading cotton futures. The market had been dead for days, a slow, sideways grind that bored most traders out of the room. Volume dropped steadily, daily ranges shrank from dollars to cents. On the surface, nothing was happening. But Linda noticed something. Volatility was contracting, and it was doing so in a steady, almost mechanical way. The daily range compressed from $2.50 to 80 cents over 7 sessions, and volume dropped by 40% each day. To her, this wasn't nothing. It was the market holding its breath. When the breakout came, it was explosive. Price surged, volume roared back, and what had looked like dead air suddenly revealed itself as coiled energy. Linda was already in position. She didn't need to chase. She had recognized the pattern in advance. That's the essence of her edge. She sees patterns early, in their incubation stage, before they become obvious to everyone else. By the time the crowd recognizes a setup, she's already placed her piece on the right square of the board. Pattern recognition, as she teaches it, is not about collecting every possible formation from a trading book. It's about narrowing down to a small library of high probability setups and learning them so deeply that you understand their behavior in different environments. A bull flag in a trending, high volatility market will behave dame flag in a slow, choppy one. The context, broader trend, volatility regime, institutional activity can completely change the odds. Many traders make the mistake of treating patterns like magic symbols. They see a breakout and assume it must follow through, a head and shoulders and assume it must collapse. Linda warns against this pattern religion. Instead, she teaches that a pattern is just a probability, and probabilities require confirmation. Her method blends the micro and the macro. The micro is the specific formation, the flag, wedge, coil. The macro is everything around it: market conditions, trend direction, volume behavior, support and resistance structure. A pattern with macro alignment has teeth. One without it is just decoration on a chart. She recalls working with a student who kept losing on breakout trades. The student was seeing clean textbook patterns, but he ignored the larger market context. When Linda reviewed his trades, she pointed out that half his breakouts occurred in choppy, low volatility environments, conditions where breakouts are more likely to fail. Once he filtered for environment, his win rate doubled without changing anything else. This is why she says the same pattern can be a gift or a trap depending on the weather. It's not enough to recognize the shape. You must understand the climate it lives in. In the heat of trading, this awareness can mean the difference between acting early and chasing late. If you've studied your chosen patterns across hundreds of examples, you can feel when the market is moving toward them. The way volume tapers, the way price compresses, the way traders hesitate. By the time the textbook version forms, you're already in or ready to pounce. Linda's charts are clean, uncluttered, because she wants to see price action without distraction. She believes the more indicators you pile on, the more you dilute your ability to read raw movement. Indicators can confirm, but they shouldn't replace your eyes. Price is the language of the market, she says. Learn to speak it before you start translating it. Reading patterns others miss isn't just a visual skill, it's a discipline. You have to ignore 95% of what you see and wait for the 5% that fits your edge. You have to resist the temptation to trade every wiggle, knowing that patience will position you for the real moves. The payoff is huge. When you spot the pattern before the crowd, you have better entry points, more favorable risk reward, and the psychological advantage of being proactive instead of reactive. It's the difference between hunting and scavenging. Linda's mastery here is not mystical. It's built on repetition, note-taking, and constant review. After each trading day, she logs every instance of her setups, whether she traded them or not, and studies them in context. Over time, this creates a mental library of how each pattern behaves in different market seasons. Her advice to aspiring traders is simple but often ignored. Stop trying to learn every setup. Pick a few that fit your style and study them relentlessly. Track them across bull and bear markets, fast and slow conditions, quiet and news-driven days. Learn their strengths, weaknesses, and tells. Only then will you see what others miss. And when you can do that, when you can spot the tension building before the release, you'll realize you're not just trading shapes on a screen. You're reading the heartbeat of the market itself. Most traders' charts look like the inside of a cockpit. Layers of oscillators, moving averages, Bollinger Bands, MACD histograms, RSI, stochastic indicators, each one shouting for attention. The result? Price is barely visible beneath the noise. To Linda Raschke, this is a sign of insecurity, not skill. Indicators are tools, not crutches. They're meant to filter the market's chaos, not replace the trader's judgment. Her charts are clean, stripped down to the essentials. Price action is front and center, with only a handful of carefully chosen indicators to provide additional context. She might use a moving average to define trend bias, an oscillator to flag overextension, or a volatility measure to anticipate expansion or contraction. That's it. Each tool has a defined purpose, no more, no less. Linda learned early that over-reliance on indicators is dangerous. When you outsource decision-making to a formula, you stop developing the instincts needed to trade in real time. And when, not if, that formula fails, you're left exposed, unsure of how to act without it. She flips that dependency on its head. The decision to take a trade is always based on price action and market context first. Indicators come second, used to confirm or refine entries and exits, never to dictate them outright. If you need 5 indicators to take a trade, she says, you don't have a trade. You have doubt dressed up as analysis. One of her favorite examples is the average directional index, ADX. In a trending market, ADX can confirm whether a breakout has genuine strength. In a choppy environment, it warns her that momentum is weak and she should stay out. But she never uses it in isolation. ADX alone can give false signals. Paired with a clean read of price and volume, it becomes a powerful filter. This approach also keeps her charts mentally quiet. She believes too many traders overwhelm themselves before they even click the mouse. With 6 indicators, each delivering a slightly different message, decision fatigue sets in. You hesitate, you second guess, and by the time you act, the setup has passed. Clean charts, clear mind, clear decisions, that's her philosophy. Linda tells a story of mentoring a young trader whose screen looked like a kaleidoscope of indicators. Every entry was delayed while he waited for all his tools to agree. Often, they never did. She had him strip his charts down to price, a 20-period moving average, and a simple volatility measure. At first, he panicked without the extra protection. But within weeks, his decision-making sped up, his trades became cleaner, and his confidence grew. The point isn't that indicators are bad, it's that they're supporting actors, not the lead. In a chess game, you wouldn't expect a bishop to move like a rook. You use each piece for what it does best. Indicators are the same. A moving average is great for identifying bias over time. An oscillator is useful for spotting stretched conditions. A volatility band can signal when price is likely to expand or contract. But none of them should be making your trading decisions for you. She also warns against indicator hopping, the habit of swapping tools after a losing streak in search of the perfect one. This constant tinkering keeps traders from building the consistency needed to truly understand how an indicator behaves. Linda recommends picking a small set of tools and learning them deeply in different market environments. Her own chart layout hasn't changed much in years. It's familiar, efficient, and tailored to her style. She knows exactly where to look for each type of information so she can act without wasting mental energy. The fewer decisions you have to make about your tools, the more energy you have for interpreting the market. Another reason she keeps her charts clean is that indicators can distort price's message if they're allowed to dominate. Price is the raw language of the market. Every tick a vote from buyers and sellers. Indicators are translations. Sometimes they clarify the meaning, sometimes they blur it. A skilled trader knows when to trust the translation and when to go back to the original text. Linda often frames it like this. Indicators are like spices in cooking. Used well, they enhance the flavor. Used too much, they ruin the dish. For her, price action is the main ingredient. Indicators just add nuance. By using indicators as filters instead of crutches, she keeps her trading adaptable. If an indicator stops working well in a particular market regime, she doesn't freeze. Her edge is rooted in understanding price behavior, so she can keep trading effectively even if she removes every tool from her chart. In practical terms, her method works like this. 1. Identify the setup from price action and context. 2. Use one or two indicators to filter for optimal conditions. 3. Enter only if both price and filter align. 4. Manage the trade based on price, not the indicator's ongoing signal. This keeps her decision-making clean and her process repeatable. It also prevents the trap of paralysis by analysis, where traders miss opportunities because their tools don't perfectly agree. Linda's mastery of this principle comes from years of paring down, removing anything that didn't genuinely contribute to better decisions. Her charts are like a master craftsman's workbench, only the necessary tools, each sharpened and ready, no clutter to get in the way. In a world where traders often look for the next magic indicator, she's proof that simplicity, used with discipline, is more powerful than any complex system. Price first, tools second, and above all, your brain, trained and sharpened as the ultimate decision maker. For most traders, risk management is an afterthought, a checkbox on a trading plan, a set of numbers scribbled in a notebook. For Linda Raschke, it's the lifeline that keeps her career alive. She doesn't treat risk as a nice to have skill, she treats it as oxygen. Without it, nothing else matters. She learned this the hard way in the chaos of live markets. Early in her career, she took a series of losses that weren't devastating individually, but compounded into a brutal drawdown. It was a sobering lesson. You don't blow up because of one bad trade, you blow up because you fail to stop the bleeding. That realization shifted her entire philosophy. From then on, her mission was clear. Protect capital first, seek profit second. Linda's approach to risk isn't just about where to put a stop loss. It's about structuring every trade so that no single mistake can cripple her account. She sizes positions conservatively, always within limits that allow her to think clearly if the trade goes against her. If your position size makes you sweat, you're already in trouble, she says. Before entering a trade, she asks herself two questions. 1. Where am I wrong? The exact price level or condition that proves her trade idea invalid. 2. What's the damage? The specific dollar amount she's willing to lose on this idea. If she can't answer both with precision, she doesn't take the trade. She treats stops as part of the trade's DNA, not a parachute to be packed later. The stop is set at the same time as the entry, based on market structure, not on how much she feels like losing. She never moves it further away to give it room because she knows that's just a story traders tell themselves to avoid admitting they're wrong. But managing risk goes deeper than individual trades. Linda looks at her daily risk, the total she's willing to lose in a single day before walking away. If she hits that limit, she's done. No revenge trades, no one more try. This rule protects her from the spiral of emotional decision-making that destroys accounts. She also monitors her risk of ruin, the mathematical probability of losing enough capital that recovery becomes nearly impossible. Her position sizing, win rate, and reward to risk ratio are all tuned to keep that probability extremely low. This is why she survived multiple market cycles while countless traders have burned out. One of her favorite metaphors is that of a poker player. A pro doesn't go all in on every hand. They play their edge, fold often, and only press harder when the odds are strongly in their favor. Trading is the same. You can't control the cards, market conditions, but you can control how much you're willing to risk on each play. Linda also understands the psychological side of risk. Small, controlled losses are easy to recover from, both financially and mentally. Big losses are a double wound. They drain your capital and your confidence. After a big hit, traders often sabotage themselves with fear or desperation, leading to more mistakes. Her method avoids this spiral by never letting a loss get big enough to shake her foundation. She recalls one day when the market was particularly erratic, swinging wildly on every economic headline. Many traders got chopped to pieces. Linda, on the other hand, was in and out with small, calculated positions. By midday, she recognized the environment was too unpredictable to justify the risk. She shut it down, flat for the day, While others stayed and tried to make it back, she went home with her capital and her mental clarity intact. Her discipline in cutting losses quickly is matched by her discipline in protecting profits. She trails stops on winning trades, locking in gains without suffocating the position. She understands that profit on paper isn't real until it's in your account. Risk management for her is less about avoiding losses entirely, that's impossible, and more about ensuring losses are controlled, recoverable, and never compounded by emotional decisions. She also applies risk thinking to strategy itself. If a strategy underperforms for too long, she reduces its capital allocation or pauses it entirely. She doesn't cling to a method out of pride or attachment. If it's not working, it's not worth my capital, she says. This adaptability keeps her portfolio healthy across different market regimes. There's one phrase she repeats to students more than any other. You're not in the business of making trades. You're in the business of managing risk. It reframes the whole game. Profit is the reward for skillfully controlling risk over time, not the result of chasing the biggest win today. It's why she can trade with a calm, steady hand while others ride the emotional roller coaster. Every position is measured, every loss acceptable, every gain protected. The thrill doesn't come from swinging for the fences. It comes from knowing she'll be here tomorrow, next month, next year, still in the game. In the end, Linda's survival-first mindset is the foundation of her longevity. She's proof that in trading, the best defense is a great defense. By managing risk like her survival depends on it. Because it does, she's turned market uncertainty into an environment she can thrive in year after year. In trading, the market isn't your biggest opponent. Your own mind is. The screens may flash with endless numbers, but the real battle is inside, between discipline and impulse, patience and fear, clarity and greed. Linda Raschke understands this better than most. Her success isn't built only on skill with charts or market timing, it's built on mastering the emotional game. She's seen brilliant analysts crumble because they couldn't control themselves when money was on the line. It's easy to be rational when you're analyzing a chart, when you're analyzing a chart at night with no positions open. It's an entirely different challenge when you're in a live trade, your P&L swinging in real time, and the voice in your head starts screaming, "Do something." Linda treats emotional control as a skill that's trained just like chart reading or strategy design. She doesn't expect emotions to disappear, she expects to manage them. Fear and greed never go away, she says. They just get quieter if you practice enough. Her discipline starts before the trade. By having her setups, risk parameters, and exit plans defined ahead of time, she removes as many emotional decisions as possible from the heat of the moment. This means she isn't improvising when it matters most. She's executing a plan. She also respects her own psychological triggers. Some traders get rattled after a losing streak, others get reckless after a big win. Linda knows both states are dangerous. If she feels frustration or overconfidence creeping in, she's quick to step away, even in the middle of the trading day. She'd rather miss an opportunity than trade from the wrong mental state. There was a day in the early 2000s when she had 3 losses in a row before noon. Years earlier, she might have doubled down, chasing the market to make it back. Instead, she closed her screens and went for a long walk. By the next morning, her mind was reset, and she traded cleanly, avoiding the spiral that ruins so many accounts. Linda has a phrase she uses with students. The market is a mirror. If you're anxious, the market will reflect it in your trades. If you're overconfident, it will show you the cost. Every impulse, every hidden bias, every flaw in your discipline, the market will expose them. That's why self-awareness is as critical as market awareness. Part of keeping emotions in check is accepting that losses are normal. Many traders internalize a loss as a personal failure, which creates hesitation on the next trade. Linda frames it differently. A loss is just the cost of doing business. The goal isn't to avoid them entirely, but to keep them small and unemotional. She also avoids overtrading, the tendency to take trades just to feel engaged. The more trades you take without an edge, the more emotional noise you generate. By being selective, she protects not only her account, but also her mental energy. Another tactic she uses is mental rehearsal. Before the market opens, she visualizes the day's possible scenarios. Trades that work, trades that fail, unexpected volatility spikes. She walks through how she will respond to each. This reduces shock when real situations arise, making her responses calmer and more deliberate. Linda knows that emotional discipline is tested most during winning streaks, not losing ones. After several good trades, it's tempting to get sloppy, assume you can't be wrong, and size up recklessly. She guards against this by keeping her position sizes consistent, regardless of recent wins. That way, she doesn't give back gains in a single impulsive overreach. Her environment also plays a role in her emotional control. She keeps her trading space organized and free of distractions. Her screens are arranged for clarity, her desk uncluttered. Small details, but they help create a sense of order, and order in her surroundings supports order in her decisions. She's quick to remind traders that the emotional game isn't just about avoiding negative feelings. Excitement can be just as dangerous as fear. If you're euphoric in a winning trade, you might hold too long, ignore your exit plan, or think you've figured it out forever. That's when the market humbles you. Linda's steadiness comes from the mindset that no single trade matters more than the long-term process. She doesn't ride emotional highs or sink into emotional lows because she's always thinking in terms of hundreds of trades, not one. This perspective flattens the emotional roller coaster. Over the years, she's developed what she calls her emotional safety net, predefined rules to guide decisions, physical breaks to reset after emotional spikes, consistent routines to keep her grounded, honest self-review to catch emotional mistakes early. By treating emotions as part of the job, not as a personal weakness, she's built a career on mental resilience. She knows that the market will always throw curveballs. Her edge isn't avoiding them. It's staying calm enough to swing cleanly when they come. At the heart of it, keeping the emotional game in check means understanding that trading isn't about controlling the market. It's about controlling yourself. The market will be what it is: chaotic, unpredictable, sometimes cruel. Your job is to show up with discipline, clarity, and patience, no matter what's on the screen. That's how Linda has stayed in the game for decades. Not because she's immune to fear or greed, but because she's learned to hear them, acknowledge them, and trade anyway, on her terms, not theirs. Trading legends aren't made in a single winning trade. They're built day by day, habit by habit, choice by choice. The quiet discipline when no one is watching, the willingness to learn when the market humbles you, the courage to stay in the game when the easy thing would be to walk away. Linda Raschke's career is proof that mastery in trading isn't about magic indicators or secret signals. It's about doing the unglamorous work consistently, refining setups, managing risk as if survival depends on it, keeping emotions under control, and always sharpening the edge that keeps you one step ahead. If there's one takeaway from her journey, it's this: skill in trading isn't given, it's earned. And it's earned not in the moments when everything goes right, but in the moments when it doesn't, in moments when it doesn't. When you stick to your plan, when you walk away from bad conditions, when you protect your capital because you know there will always be another opportunity. So the call to action is simple: trade with intention, strip away the noise, focus on what you can control, and let every decision serve the long game, not the quick win. Study relentlessly, execute with discipline. Respect the market and respect yourself enough to walk away when the odds aren't in your favor. Because in the end, it's not about chasing the market. It's about becoming the kind of trader the market can't easily shake: steady, adaptive, and built to last.